Hey guys, this video is going to explain to you how I cut my monthly mortgage payment in half by using a recast. A few months ago, I cut my monthly housing payment nearly in half. It was around $2,000 a month, and now it's around $800. I didn't change my interest rate. I didn't refinance. I didn't extend my loan terms, and I didn't pay any money. So how did I do it? How did I make something that's so expensive for everyone more affordable? Well, what I did is I used something most homeowners don't even know exists, a mortgage recast. In this video, I'm going to explain exactly what I did, how it works, when it makes sense, and when it doesn't. So here's the situation. Like a lot of people, my biggest fixed expense was housing. And when you look at personal finance, there's one rule. If you reduce your largest expense, you dramatically change your financial flexibility and peace of mind. Instead of refinancing, which would have meant new closing costs, potentially worse interest rates, definitely worse interest rates, and resetting the loan timeline, I explored a recast. Most people don't even ask the lender about this. So what is a mortgage recast? A mortgage recast is when you make a large principal payment or payments on your mortgage, and the bank recalculates your monthly payment based on the lower principal balance. Here are some important things to keep in mind. Your interest rate stays the same. Your loan terms stay the same. You do not refinance. There's sometimes minimal fees. My bank does not charge any, and they simply re-amortize the remaining balance. That's it. So how did I do it? Here's how it worked in my case. Use your real numbers if you want authenticity. So let's just say my original loan balance was $300,000 and my monthly payment was $2,200. I made several large lump sum payments. After those payments, the bank recalculated my loan based on $200,000. Same interest rate, same remaining term. My new payment dropped significantly. No refinance, no credit pull, no market timing risk, just math. So why did this work for me? There were a few reasons it made sense for me and it might not make sense for you. I had liquidity available. My interest rate was already strong, 5.37%. I wanted to reduce fixed monthly obligations. I value cash flow flexibility over early payoff speed. By lowering the required payment, reduce stress, increase savings rate, flexibility, and creative margin. I can still pay extra principal if I want. So, again, what's the difference between a recast and refinance? This is important. Recast keeps your rate, keeps your term, low fees, no underwriting. While refinance, new rate, new term, closing costs, credit check, market dependent. If rates are high, refinancing may not make sense. If your rate is already strong, recasting can be powerful. But like I said, for some people, recasting doesn't make sense. Recasting isn't always the best move. It might not make sense if your interest rate is very high and refinancing would save more. You don't have a significant lump sum available. Most banks require at least $1,000 extra principal payment. Your lender doesn't allow recasting. It has to be a conventional loan. FHA loans or VA loans don't work. You need the liquidity more than the payment reduction, and just check with your lender on, their terms on it. And there's a great psychological benefit, and that's really important if you're like me. This is underrated. Lowering your mandatory monthly obligation changes how you think, changes your risk tolerance, improves your job flexibility, and reduces pressure. Even if the total interest paid over time stays similar, the flexibility is powerful. Sometimes it's not about maximizing theoretical returns, it's about lowering fixed risk. And on a strategy perspective, there are two types of people. Maximize returns at all costs, maximize stability and flexibility. I personally fall somewhere in between. For me, cutting housing expense nearly in half was worth more than squeezing extra basis points somewhere else, like the stock market, etc. Cash flow equals options, options equal leverage. So how do you ask your lender? The best way is just call the customer service number. That's what I did. Generally, they have guidelines online. Bank of America does. Several others do. You just call them. Usually, just tell them how much you paid and, if they have any specific requirements, they'll let you know. So if your housing payment feels heavy and you're sitting on liquidity, a recast might be worth exploring. It's not flashy, it's not viral, but it can dramatically improve your monthly cash flow. If you found this helpful, subscribe for more practical breakdowns on cash flow strategy, financial leverage, risk reduction, taxes, smart capital allocation, operations, hiring, and more. And if you've ever used a recast before, comment below. I'm curious how it worked for you. Have a great day.